Hey, everybody, welcome to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. If you are new here, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. It supports the podcast and it doesn't cost you anything. Well, folks, I have some big news before we get into the crypto news, and that is I have written a book. It's titled Rethinking Crypto: The Crash of FTX and the Rise of Safer, Stronger Digital Assets. I wrote this book to give an overview of crypto's past, present, and future, to give a 360 view of what's happening in this asset class. So it's a very holistic book. It talks about why FTX was not the ethos of crypto, the regulatory battles, SEC versus Ripple. I document everything in there. I think it's important to document these stories and all the fighting that we've been seeing from the TradFi incumbents. I also talk about the Bitcoin spot ETF being led by BlackRock. We talk about tokenization, CBDCs, NFTs, and it also includes the do's and don'ts of investing in crypto. So this can be a really great gift for someone who wants to learn about crypto, but it's also a great read. You're telling the story holistically about crypto and what its future outlook looks like. And this is going to go on sale on Amazon on April 16th. So next week. So not available yet, but will be available next week on April 16th. So I'll put a link in the description for you to learn more. You can check it out, or you can visit thinkingcrypto.com. Well, folks, let's look at Bitcoin because we're seeing a bit of a pullback. It's still chopping sideways, bouncing between 68,000 and 71,000, still consolidating here. Bitcoin currently at the time of recording at $68,846. But what's bullish, guys, is the DXY continues to break down. That's really good. It looks bearish on the daily chart. We want it to keep going down, and then I believe we're going to see fireworks with Bitcoin and altcoins, but we have to be patient. Market cycles are playing out here, and we got to let all of these things confirm themselves. But we're moving in the right direction here. Bitcoin, obviously, once again, bouncing, consolidating, and the DXY is breaking down. So all setting the stage for another rally upward. So we got to be patient with this. Now, some other driving factors for the bull market is that we continue to see the debasement of currency globally. And I've often cited that global liquidity is on the rise. And when liquidity is rising, when there's debasement, asset prices start to increase, right? We've seen this time and time again, and that includes crypto, real estate, stocks, and much more. So Raoul Pal shared the GMI Total Liquidity Index, and he says here, while everyone is worried about 3.5% inflation, the real issue is ongoing 8% per annum debasement of currency on top of inflation. Your hurdle rate to break even is around 12%, which is the 10-year average returns of the S&P 500, just to keep your purchasing power. So we've often talked on this podcast that you have to invest in assets. Now, you don't put all your money in assets. Obviously, you need operating income, right? You have to pay your bills, spend your money, and so on and so forth. But the money that's sitting in the bank that you're looking to save, it's not earning crap. I don't think I even need to tell you guys that. That's why you need to diversify into assets. And it's not only crypto, but as Paul Tudor Jones said, crypto is the fastest horse in the race. It's getting you the bigger returns at a faster pace. And we see that Bitcoin is a top performing asset compared to TradFi assets and much more over the past 10 to 12 years. So it's incredible what's happening. And I'm invested in stocks. I have a real estate investment property, but the thing that's making me the most money is crypto. And I think many of you can attest to that. So Raoul is right here. And this is why on this podcast, we look at everything: charts, the fundamentals, the macro, and much more, because all of these things play a factor in investing. What the Fed does with interest rates and much more. What is global liquidity looking like? And all of these things play a major factor when it comes to investing. And I'm sure many of you saw this news already, but China's largest funds are applying for spot Bitcoin ETFs in Hong Kong. So we're seeing the on-ramps being built globally to Bitcoin. Eventually, it will go to altcoins and altcoin baskets, but it all starts with Bitcoin. And then once Bitcoin is through the door, then the others will follow. So China and Hong Kong and different regions, I think London, it had been reported a couple of weeks ago, they are looking into this. So we're seeing game theory play out globally, and there's going to be a lot of capital flowing into these assets. And I'm so glad I'm here early and I understand the market cycles. I've been buying the bear market bloody bottoms and obviously looking to sell the euphoric blow off tops. And I hope that is your strategy as well, because that's what gives you the greatest return. Not buying with the herd when things are pumping in the bull market. That's the wrong time. Sure, you may make some money. I'm not saying you can't make money, but more often than not, if you're buying with the herd, you're most likely buying near the top and you could get wrecked. A lot of retail investors get wrecked because they're not researching. They're passive, right? They're just looking and they see something on TV, or an Uber driver told them something, or Jim Cramer said something, right? And we all know you don't listen to Jim Cramer when it comes to investing. So this is why you have to research and understand the market cycles and what's happening. So, guys, ETFs being launched globally, and it's going to drive more capital into the market. Now, here's some more bullish news. Venture studio Thesis debuts Bitcoin utility product Mezo with a $21 million raise. Bitcoin layer 2 solutions continue to proliferate. So we're seeing the rise of Bitcoin layer 2s. I don't know how well they're going to do. We see there's a ton of layer 2s for Ethereum. Bitcoin is a different beast, however. It's not a smart contract platform. It's slow and the fees are high and so forth, depending on how you're using it, of course. So we'll have to wait and see. But nevertheless, the capital is flowing in and the building is happening. And you all know I hold Bitcoin. I am bullish on it, but I don't know how well these layer 2s are going to do. I still haven't seen any major adoption or market impact from the Lightning Network to improve Bitcoin scalability. That's not to say it won't eventually get there, but so far it has not yielded great results as it relates to real world adoption, the average Joe being able to use the Lightning Network and globally. So we'll have to wait and see. So venture production studio Thesis has raised $21 million for a Bitcoin layer 2 like product called Mezo. The round was led by Pantera Capital and drew participation from Multicoin Capital, Hack VC, and others. Dubbed a Bitcoin economic layer, Mezo is focused on providing fast and cheap Bitcoin transactions so the asset can have a more real world utility. So there you go, folks, right? Bitcoin needs that. It's something to unlock its real world utility, aside from store of value. So don't get me wrong. Mezo lets participants in its network lock up their Bitcoin in exchange for yield, a system Mezo calls proof of hodl. Mezo is the latest in a recent proliferation of so-called Bitcoin layer 2s that allow Bitcoin to be put to use beyond trading. Other prominent examples include Babylon and Stacks. Now, I'm familiar with Stacks. I at one point was participating on a network earning the STX token. I think I still have a few, but not much. So, which both attempt to offer Bitcoin users features like staking. BitVM has also emerged as a network scaling focus on layer 2. So good news that there's building and there's different innovations happening to help improve Bitcoin's utility, but we need to see a real world application and see this go live where it's beneficial to people in the real world, not just crypto users. All right, folks, let's move ahead. Many of you know today was a Senate banking hearing, and they brought in the deputy of the Secretary of the Treasury to testify. And of course, Elizabeth Warren was there spreading FUD and lies and much more, trying to paint crypto in a negative light. So here, Eleanor Terrett of Fox Business reported that Senator Warren focused on validators or nodes not being subject to the same AML laws as banks. She asked Wally Adeyemo, he is the Deputy Treasury of the Secretary, if she sent him $1,000 in cryptocurrency, is it possible that Iran is the validator of that transaction? Adeyemo said it's definitely possible. Warren responded, so Iran, which is subject to all kinds of sanctions, are making millions of dollars validating transactions, all because we don't have the tools to stop them? Adeyemo said yes. So you can see here, no details, no facts, just stories, hyperbole, right? Saying, oh, Iran's making millions of dollars out of crypto. Guys, we know the game here, right? She brought Jamie Dimon in just about a month ago, was it? Or a month and a half ago to spread lies. But it's okay. She's on the losing side of history here. Now, to make sure I'm clear, I'm balanced here. I believe in comprehensive regulations to protect consumers, but allow innovation. But she's trying to kill the whole thing, right? We know that she's working for the banking incumbents who want to take over this industry. She also asked if there is a correlation between the growth of the crypto market and the amount of money Iran is pocketing. Adeyemo said yes. Wow, really? Warren said there needs to be a regulatory framework in place for stablecoins that will subject users to AML laws. Now, enter Senator Tim Scott, who shot this down big time and exposed them. And Paul Grewal, a chief legal officer of Coinbase, highlighted this. And I'm not going to play the video, but here's what Tim Scott said. For us to have a conversation that sounds like a digital asset conversation, as opposed to a conversation about illicit financing that is far larger than digital assets, to me, makes it into a scapegoat. So essentially, he's saying, hey, we sent Iran, what is it, $6 billion or whatever, how much? We sent them pallets of cash, and you're worried about digital assets being used for illicit finance, right? And he highlighted the facts that the illicit finance that are done by whoever, Iran or whoever it is, it's done mainly in fiat currencies and largely cash, which is the world reserve's currency. So they're clearly trying to paint crypto in a negative light, not giving the full details, not giving the facts, just stories. So wait, Iran is making millions every month off of crypto and digital assets? Yes. How much? Who? When? How? What year are we talking about? Was this in the past before there was blockchain analytics, right? You see what I'm saying here, guys? It's all a game that she's trying to play here. We know she's controlling Gary Gensler as well. But vote John Deaton. He's running against Elizabeth Warren to kick out her corrupt ass out of the seat there in Massachusetts. So donate to John. And if you're in Massachusetts, please vote for him. Now, Senator Tom Tillis also weighed in overall on crypto regulation, saying there needs to be light regulatory regimen put into place. We want to create the most hospitable environment for digital assets to thrive. We don't want to overreach and lose the opportunity to be that jurisdiction. So this is a balanced approach, right? Like I said, we're not saying you shouldn't stop bad actors, but bad actors use any medium of exchange, fiat, crypto, gold, whatever it is, they will use it. So you want to stop the bad actors. But Elizabeth Warren is not focusing on the bad actors. She's focusing on the assets and trying to make it seem as though it is the asset being used for all illicit activities in the world. And obviously that is false. So this is why we got to keep fighting. We have to amplify the truth and the facts and the data, and use social media to your advantage. Call your representatives, send emails, make phone calls, folks. We have to provide the education because, look, some of you may ignore it and say, oh, Elizabeth Warren is a crazy old lady. Folks, there are people backing her in the Senate. And I've spoken to Ron Hammond of the Blockchain Association about this. It's a lack of education. They know her and they followed her for a long time. And she has a lot of power in the Senate and under the Biden administration, obviously. So many of them are just following along. They don't even care about the details. They're just like, oh, Liz is against crypto. Oh, yeah, I'll join her, right? No details, no facts, just the herd mentality, right? So there's many of them that are doing that. So this is why we have to educate, we have to amplify the truth and fight back, folks. Now, as a result of lack of clarity here in the United States and even other jurisdictions around the world, we're seeing many crypto companies are moving. They're picking up and leaving to going to places that are more pro-crypto, like Dubai, UAE, Singapore, and so forth. So another crypto company eyes expansion to innovation-friendly UAE. Denmark-based Northstake looks to use Dubai as a strategic base to survey expansion options. So staking, we all know, is currently under attack in the United States. Gary Gensler and the SEC suing Kraken, trying to sue Coinbase, obviously. And the whole thing behind this is the incumbents pulling the strings, right? The banking incumbents like JP Morgan, they don't want you to take your money out of your savings account and go put it on a blockchain network where you can earn a higher yield. They hate that, right? That's what's happening. Why a big part of the fight. They have controlled these investments and the markets for a long time. Well, disruption is at their door, and people can now be their own bank and do a lot with DeFi and so forth. They don't like that. That's why the fight is happening. So once again, it's not only in the United States, but it's in other places as well. So a crypto staking specialist is looking to expand to the United Arab Emirates, making the latest segment player looking to set up shop there. Nordstake has gained initial approval from Dubai's Virtual Asset Regulatory Authority, VARA, as a first step toward getting a virtual asset service provider license, the company told Blockworks. Such a license will allow the Denmark-based company to offer crypto custody services like custodial staking to institutional investors in the Emirates. It ultimately seeks to use the UAE as a strategic base to survey expansion options. So, look, many of the countries who are supporting crypto are going to gain the benefits, right? Economically, jobs, and much more. I can only speak for the United States, but when will the United States act and pass crypto regulations? So we got to get this going. All right, folks, a quick word from our sponsor, that is Uphold, which is a great crypto exchange that I've been using for years. You can buy Bitcoin and all the top altcoins. You can also trade precious metals on this platform, such as gold, silver, palladium, platinum. They are one of the top exchanges out there with a lot of great features. In fact, today, they expanded their vault service to include Bitcoin. They had initially started with XRP. Now they support Bitcoin, and they will be adding other assets. So what is Vault, you may ask? It's a better way to self-custody where there are 3 private keys and you hold 2 and Uphold holds 1. So it gives you peace of mind. And for example, if you lose either of your private keys, Uphold will replace it and restore access to the assets in your vault. It's a great way to have peace of mind. A lot of companies are moving in this direction because not everyone is fully tech savvy, and depending on their living situation and much more, having a hardware wallet where that could get lost and other things can happen. You kind of want to have that extra layer where you still maintain the private keys. No one can move your funds without you, right? That's not what this is. So you have to give the authority, and if anything happens, you lose something, you at least have a backup, and that's a nice feature. And once again, it still maintains that self-custody aspect because that's important, that you still control what's happening. And I think this vault feature is pretty great. I'm going to be looking into this and how I can personally use it. So if you'd like to learn more about Uphold, to trade or to check out Vault or much more, check out the link in the description. And guys, thank you for watching and listening. Like I said, check out my book announcement here. Link will be in the description. Coming next week, April 16th, we'll be live on Amazon. Subscribe for our free email newsletter to get a notification on that. Thank you for watching and listening, guys, and I'll talk to you all later.